Hello, welcome to the Daily Horizon View. The date today is the 22nd of the 7th, and we are taking a look at the ASX Exchange Traded Funds Top 5s as curated by me, Scott. Spotlight today is on ISO, iShares, S&P ASX Small Ordinaries ETF. Stick around for that one. Another interesting ETF to take a look at and consider for your own portfolio. Let's get stuck into it. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, let's cast our eye over the top percentage rises. We're looking at today ISO, which is our spotlight. Hang around for that. VLC, GDX, MVR, and AUMF. So let's quickly touch on ISO. That's the iShares S&P ASX Small Ordinaries ETF. So the fund invests primarily in Australian small listed securities from the index, which we'll go over later. Rough valuation here, or I should say market cap of about $90 million thereabouts. Dividend yields fluctuate a little bit since I checked it last. It's about 4% from memory. Morningstar rating of a neutral. We saw a percentage gain today of 1.61%, which equates to 8 cents, all on a reasonable volume, 55,200 shares traded. Quickly run our eye over the top 5 percentage falls. We got UBU, get my words out right, CNU, IEU, HEUR, and EMKT. So UBU is the UBS IQ MSCI USA Ethical ETF, and that aims to replicate the performance of the MSCI USA ex tobacco ex controversial weapons ETF, index I should say, and that has a market cap of roughly $7 million. As with most of these US ETFs, you get a small dividend yield, and this one has a dividend yield of roughly 1.89%. We saw a fall today of 1.53%, or a loss of 47 cents on a relatively low volume of 105 shares traded. Taking a look at the top $5 rises on the market today, we saw VLC, GDX, IJP, MVR, and VSO. VLC is an interesting one. That is the Vanguard MSCI Australia Large Companies Index ETF. And that tracks the 30 largest cap stocks on the index. Rough value here of $93 million. You get an interesting dividend here of roughly 4.66%. Morningstar have quite a solid rating on this one. So that's a bronze rating. So effectively 3 out of 5 stars on that one. We saw VRC up today 96 cents, or 1.39%. We saw a volume of 9,000 shares traded. Top $5 falls. We saw IHVV, IVV, ETPMPT, ETPMPD, and VAP. IHVV is the iShares S&P 500 AUD hedge, so Australian dollar hedge. So that one tracks the S&P 500 in the States, and as mentioned, hedged to the Australian dollar. That one has a market cap of roughly $166 million. You have a smallish dividend yield here of 2.81%. Morningstar analysts like this one. They've given it a gold rating, which is effectively 5 out of 5 stars. We saw today a loss of $3.16. which equates to 0.84% on a very, very low volume of 433 shares. So if you look at IVV, that's pretty much the unhedged version, and that was also down. So people looking to get out of exposure to the S&P 500 for sure. Top 5 number of trades, we saw VAS, VAP, VGS, IVV, and IOO. So VAS, which is the Vanguard Australia Share Index ETF, and that one tracks the S&P ASX 300. That one has a market cap of roughly $3.5 billion. You have a pretty reasonable dividend yield here of roughly 4.45%. Morningstar give this one a rating of bronze, which is effectively a 3 out of 5 stars. We saw a number of trades here of 307. Predominantly on the downside here, we saw a loss of 21 cents, which equates to 0.25%. Top 5 for volume. Let's have a look what we've got here. ETHI, FAIR, Drug, VAS, and STW. ETHI is the BetaShares Global Sustainability Leaders ETF. That one tracks the NASDAQ Futures Global Sustainability Leaders Index. Reasonable market cap for this one, you're looking at roughly $340 million. As with all these American focused ones, you get a low dividend yield of, in this case, 1.6%. Morningstar rating on this ETF is neutral, which is effectively 2 out of 5 stars. We saw a volume today for ETHI of 532,400 shares. On the downside, because we saw a drop in the share price of 5 cents or 0.58%. Top 5 for values, cast our eye over this one as well now. VAS, VAP, STW, FAIR, and ETHI. So VAS, as we mentioned before, that one is the Vanguard Australia Share Index ETF. We saw value of the shares in that ETF today was traded, I should say, was $7.8 million. On the downside, as mentioned before, we saw a loss of 21 cents or 0.25%. Okay, let's take a look at the spotlight for today, which is the iShares S&P ASX Small Ordinaries ETF. The fund aims to provide investors with the performance of the index before the fees, blah, blah, blah. Composed of a small cap Australian securities listed on the ASX. So how the index is constructed. The index is the S&P ASX Small Ordinaries Accumulation Index. It's composed of companies included in the ASX 300, but not in the ASX 100, and accounts for approximately 7% of the market capitalization of the ASX listed equities. So it looks at the smaller 200 of the top 300 companies, if that makes sense. So, you know, are they typically, they're bigger, smaller companies, if that makes sense. So why would you bother investing in this ETF? So it gives you exposure to 200 smaller cap Australian stocks in a single fund, access to an institutional benchmark of small cap Australian equities, use to diversify your portfolio and customize your domestic stock allocation. Moving along right now. Let's have a quick look here. So the net asset value is $5.04.8. We have a closing out today of just under that at $5.04. Market cap of $105,100,000. We can see a measurement cost here of 0.55 of 1%. Distribution frequency semi-annually, January and July. Dividend yield on the smallish side, 2.34%. That's mainly because you're looking at the smaller companies, and those smaller companies don't pay a big dividend because they're reinvesting back into their own physical growth. So smaller companies tend to outperform larger, more mature companies as they have gone through their growth phase already. This is a good reason for investors to be looking for smaller companies that can outperform the market over the long term, thus increasing your portfolio returns. So buying an ETF like ISO could be a great option for investors that don't want to actually spend the time to pick individual shares themselves. However, some caution needs to be taken as a Small Ordinaries Index does include some companies that may not necessarily be classed as investment grade, but that's what you're going to get when you're looking at smaller companies anyway. So you're taking a risk on the company stays alive, and you can also get that growth out of them. So looking for outperformance for our portfolio. So including an ETF such as ISO in your portfolio may give an investor some, as I mentioned, extra needed exposure to the smaller companies in the ASX, which should actually help you drive some better outcomes, better returns for your portfolio. So as always, we should be doing our research and double checking and looking for all the options before we make a purchase. So check out SSO and VSO, which are some other small small companies ETFs. Quickly have a look in here at the chart. I mean, it hasn't really shot the lights out since its inception. Was it late? I think it was October 2010, I think it was. So, you haven't really come back into actually making any money. So, I mean, you would have had to hold it for quite a few years before you're back into making money, and that would have been sort of midway through 2016. So you're looking at, 6.5%, 7% return over those 8 to 10 years. So looking on the right-hand side here, you can see the spread of the top 10 holdings. So you've got YSEC Global, NIB, so Saracen Minerals, Regis Resources, Appen, Steadfast Group, Harvey Norman, Metcash, Independence Group, Sambara. So you can see a bit of a mix, looking at mining sort of companies, some insurance companies, technology. So a bit of a different mix, and you're kind of going to get that from that, looking at the sort of smaller end of the town. Anyway, I think it's definitely something to look at. There can be some volatility in the ETF such as this because of the underlying companies. So some of them may not reach your own sort of investment criteria, but I mean that's the risk you take when you're investing in these smaller companies regardless. This ETF might not be for some people. Some people might want to choose their own small caps. So do the research and choose. But if not, I think this is a good option to actually sort of cover off that growth, or try to get a bit extra growth into your portfolio by using an ETF like this. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing, and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.